So I made over 16,000 bucks this month so far, and there is still another 2 weeks left um, to play and to sell options. And I do this so simply, selling cash secured puts, cover calls. Yes, I do use a little bit of margin, but I don't go heavy into it. And that's because of days like today, or even days like Monday, where the market is just tanking, right? Obviously, there's CPI data going on. The economy is about to, the government is about to potentially shut down, and there's a lot of information that's going on, and a lot of earnings are going to go on, and we're looking for like that savior for the market. It could be anything at this point to get the market running. Also, a lot of people are spreading their money into meme stocks, so it's just how the market cycles go. This is how it's been, and in the Discord, people were asking me why I'm closing out certain plays. It's because I've seen this before. I've been in so many crashes. I'm 36 years old, and I've seen all the crashes that I could possibly see and or that I even want to see. And the beauty of it is, like I said, with the experience that I have, I saw something in the market and I didn't like what I saw, and I thought that maybe I'm a little bit too over levered, and maybe I should close out some of these plays. And that's exactly what I did. And I went over this in my Discord, which I'm going to show you here. This is in the premium side where I show a few things right here. Like I closed 4 contracts of my hood play. I closed 2 contracts of my hymns play. I closed out my Tesla cash secured put. So overall, like last month's premiums went down a little bit, but I put it towards this month because these are the times I'm making the plays. And even though I made 13,644, I also made another 1648 to add to that. I made another 1608 to add to that, and another 621. And in these, I made the plays obviously a little bit further out, and I put myself in positions where I'm cool with buying the stocks, because obviously that's what you have to do with a cash secured put. You have to be cool with buying the stock at the strike price that you chose. Super simple. You have to be cool with doing it, because if you get assigned, then you're assigned, and that's just how it's going to be. And then they're going to have to own the stocks, and you're going to have to figure out what to do from there. And for the most part, it's going to be covered calls. And you're over levered and you started to have to buy these stocks fully on margin, then you're going to have to start earning owing interest. And yes, you could technically pay that back with the premiums that you'd be collecting on the covered call. But if the stock keeps dropping, these plays will look really bad, and you're going to get wrecked pretty quickly, paying interest, probably having to add in more money, house called, margin called, whatever you want to call it. That's what is going to happen. And that's why I decided to close out a lot of positions. I just saw certain markers to me, or market sentiment, that I was like, it's time to close this out, and let's take the money off the table. And that's what I talk about with this all the time. On take the money that's on the table, take it off and put it in your pocket. That's really it. Try not to lose. That's the plan. We want to win as much as we possibly can. And for those that have been following me, I don't close out plays that often, especially for losses. But when I do, it's because I see something. It's because I feel like I might have been too out there. And you'll get that with the experience. You'll get that with following the Discord. You'll get that just with more reps under your belt. And that's going to be the thing. And then we could go into some questions that are in the Discord here. And it's fun to do this because newer people come to the Discord and they believe that what I do here is like a get rich quick thing because I'm making 10,000 plus a month. And It's not, because obviously it takes money to make money. I have a somewhat decent sized account, small to most people, but it's pretty big for others as well. So it's decent sized. And again, I use margin. And with the amount of collateral you use, I'm still making like 10%, which is a lot of money. A lot of money, but 10% of $100,000 is $10,000. 10% of $100 is $10. So it just matters on how big your account is to get to where you want to be. And some of the questions that I get asked here is like, oh, when you roll plays, how do you know you're getting a credit? It's really simple. Like if you could just do the buy to close and sell to open, and then usually calculate it, sit down there. Like especially on Fidelity, to show you debit means you're going to owe money, credit means you're going to get paid money, and it matters on what the market is showing. If you are in the money, you're going to have to go further away from the current stock price. And that's how you'll get a credit, because you're putting more risk on the table. Why would the market want to pay you more money for being safer? That's what it's going to be. So you can't look at it that way. So that's an answer to that question. And of course, to the person that asked it in the Discord, I will answer it a little bit more thoroughly in there. And then another question is, how would I stagger my plays? Are you doing monthly expiring the same week? I am doing monthlies, but I might do a 3-week, a 4-week, and a 5-week if that's how much money you have. If you have like 15, 20K, that's how I'd stagger it, because I personally like to always continue playing as much as I can. I like money always freeing up. I don't like to put everything all on one date, because if the market goes against you, then that date is totally fucked. Like that's like, sorry for cursing, but it is what it is. You don't want to be stuck putting all your eggs on one date, or putting all your eggs in one basket. So might as well stagger it so money's consistently freeing up, and you could technically just play with the strike prices from there. You might get paid a little bit more for a little bit lower strike price, but a little bit further out. So this is how you get into your own routine of how you want to trade, and that's how I personally like to teach it, because just consistency, figuring out what you like to do, and trying not to worry as much. And I think that's the beauty of selling options, because you're just collecting income. Like with these crashes, I'm not terribly worried, because I don't have any shares on margin, you know? I'm pretty much cash heavy, because I literally hold almost no shares of anything, but I'm still collecting a decent amount of money. So this is just what I wanted to go over in today's video. I know it's like these kind of get repetitive, but I feel like the more I talk to you guys about what I'm doing, and I'm journaling it, and people tend to resonate with what I'm doing, because people have these type of questions, and then if I could answer it, it helps out a lot of people with their trading strategy. So let me know what you guys think. Check out the free Discord. I got courses out there. Check out the links in the bio. And that's really it. Thanks for watching, guys, and I'll see you guys very, very soon. Peace.